Alright, we're gonna try filming in a dark environment here. My first video doing so. Alright, let's try this. How much money are you willing to risk for a chance to hit it big? User, winner takes all on Wall Street Bets posted a $1.25 million profit on a mere $68,000 investment for a 2,000% profit. I mean, not many of us can risk $68,000 as an initial investment, but hey, if there's any type of investment that can net me a 2,000% profit, I'm down. Are you? Well, no shit. Who doesn't want to profit 2,000% on their initial investment? But with these type of insane returns, you're obviously investing in stocks that are highly risky. That being said, you only live once. So for the investors out there that wants to enjoy YOLO Town, here are 3 stocks out there for you. Invest at your own discretion. Welcome back to my channel, it's Eric here. For more videos like this in the future, please remember to hit the notification, hit subscribe, and smash the like button for the YouTube algorithm. Your support really means a lot to me. And trust me when I say this, I read every single comment you guys comment in my videos. Now the first stock we're going to be talking about for you YOLO investors out there is Bath Bed & Beyond, or BBBY. In 2015, from an all-time high stock price of almost $80, the stock started to decrease over the next 4 years until 2019 due to the struggles of brick-and-mortar retail stores. As consumers slowly shifted towards e-commerce, old-school brick-and-mortar locations began to struggle, and Bath Bed & Beyond was no exception. However, in late 2019, the company hired a new CEO who was previously an executive at Target. And it seems that the market has reacted positively since the price of the stock has been going up ever since. Under new leadership, the company improved supply chain efficiency, e-commerce presence, and last but not least, they positioned themselves as a home furnishing retail store. This is actually really huge because in the past when you walked into Bath Bed & Beyond, there's really no identity in the store. You don't really know, well, you know that they're selling products, but you don't know what they're representing in the market segment. Under new leadership, they have an identity, which is a start. Though the company really struggled in the beginning during the pandemic, like all the other brick-and-mortar retail stores out there, their continued investment on supply chain efficiency as well as e-commerce helped them weather the storm towards the end of the pandemic, or the last couple months. I mean, we're not towards the end yet. Who knows when this will end? You see, I kind of think of Bath Bed & Beyond's future kind of like Best Buy, where Best Buy was really struggling in 2012 before they reinvented their business model. And because of their reinvention of their business model, just look at the stock price of Best Buy right now compared to 2012. I mean, for Bath Bed & Beyond, things are definitely looking better now than they were a couple years ago, but only time will tell to see if any of these changes are too late to help the company recover. So that's why this is a YOLO stock, because if the company recovers, then you're gonna make a lot of money, but if they don't recover, then you're probably gonna lose a lot of your money, kind of like Sears, where it becomes a penny stock. The second company is none other than Gamestop. Now that the short squeeze for GameStop stock is somewhat over, we can now truly evaluate the future of the company. Although the stock price is still very volatile, but even before the short squeeze that made the stock price very volatile, the company's outlook is becoming very, very bright. First of all, Ryan Cohen, a very successful entrepreneur who founded the online e-commerce pet store in Chewy, not only purchased a minority share in GameStop last year, but also decided to join its board of directors. And with his knowledge in e-commerce, it is expected that Ryan Cohen will give GameStop its much needed change in the business model, which focuses more on e-commerce. With the video game industry booming, you would expect GameStop to be thriving in the future. Yet it's not that simple. There's still a lot of questions to be asked here. We don't know how hardware gaming will be competing with digital gaming in the future. With games now being able to be downloaded digitally, even very large games, even AAA titles, Is there even a market left for GameStop to be thriving in? Will GameStop fail like Blockbuster, where both companies failed to invest in the digital market sooner? And by the time these companies realized that they had to go digital, it's already too late because there's already competitors out there that's already dominating the digital market. So for example, for Blockbuster, by the time they realized that they had to go digital, it's already too late because there's companies out there like Hulu, like Netflix that already dominated the market. So for GameStop, it's going to be hard for them to go digitally because there's already companies out there like Steam, like Epic Games that already dominate the market. So by investing in GameStop, you're basically banking on the fact that the hardware gaming market will still thrive even though everybody is slowly transitioning into digital. And that's why makes this investment very YOLO-ish. But if it all works out well, you might make a lot of money. Last but not least, you really can't have a YOLO list without including a weed stock. So today we're going to look into Aurora. When Canada officially legalized marijuana in 2018, Aurora enjoyed several years of having a very high stock price. That's understandable because people were expecting that the demand of weed would go up due to the legalization of weed. In fact, during this time, Aurora used its momentum to aggressively grow its own company by acquiring different competitors. Sounds like a good plan. What can go wrong? Canada just legalized weed, US is soon to follow, the demand will definitely be increasing. And in fact, the demand did increase, just not for Aurora, because the problem is that Aurora positioned themselves as a premier weed brand. I mean, let's face it, most people who use weed are trying to get high the cheapest way possible. Why spend 25 bucks to get high if I can get high by spending only 5 bucks? In fact, the data shows that while the weed market increased by 36%, the average price dropped by 30%, which puts Aurora in an awkward situation. In November of 2020, Aurora was forced to issue more shares to offset their losses. I mean, this really isn't unheard of in the marijuana industry, but issuing more shares does decrease the price of each share. That's just basic supply and demand. That being said, there's a lot of hype in weed shares right now because Biden is now the president and the public believes that Biden is soon to be legalizing marijuana. And with Aurora finally breaking into the US market, perhaps, just perhaps, we are bound to see Aurora's share price skyrocket. But with every weed stock out there is still very volatile and the risk is definitely still there, which makes this stock a YOLO stock. Two more honorable mentions is the Tesla stock, which I made the video earlier, and Beyond Meat. Both companies are changing their respective industries by going greener. And both companies are in industries that are expected to grow about 20% year over year for the next decade or so. Anyways, thank you all so much for watching this video. Please remember to subscribe and smash the like button for YouTube algorithm for more videos regarding financial planning, financial investing, job search, as well as financial comedy. Thank you all, and I'll see you next time.